Let's examine problem 6.4a. This has us doing financial statements for a merchandising company, a company that sells inventory. We haven't done this so far. So when we did chapter 1 and even chapter 2 and 3 financial statements, all of the companies we looked at provided services. They were like consulting companies and these types of places. This company sells stuff. And because they sell stuff, their income statement is going to look a little bit different, as we will soon learn. Now, the good news is the way the question is sort of framed here, it gives us an adjusted trial balance and it lists all the accounts in order. That makes the financial statements easier than chapter 1, where we listed the accounts in random orders. So, I'm just going to highlight here. We're going to have to do, so just looking through this trial balance, just below it, it says the first thing we got to do is do an income statement. And when we've done the income statement, compute gross profit percentage. Okay, that's what we're going to do in this video. So an income statement, as you'll recall, is the summary of revenues and expenses. So I'm just going to highlight them. And again, that's the good news about this, the way this question is formatted. Like, there's our income statement, right? Revenues minus expenses equals net income. Literally, if I took the credit account, subtracted out all the debits accounts, I'd get my profit or my net income. But of course, we know format really matters here. So let's start with a title. And this is called Julie's Plumbing Supplies. We are doing an income statement. And these things get dated for the year ended and then the date, which is March 31st, 2024. How do I know it's for a year and not a month? Because the question says for the year. So that's how I know. Okay, let's start with our revenues. And the first sort of new piece of information here is our revenue amount actually involves the sales returns as well. So sorry, I wasn't meaning to highlight the 6 there. The sales revenues are 365. Again, ignore that for now, the dividends. The sales returns are 25. So our net sales, what just happened here? I've jumped into a whole nother problem. What is going on? This is crazy. I'm going to keep it going here, but if this keeps fritzing, I'll have a problem. Okay, our sales revenues were 365. Our sales returns were 25,000. So we take one minus the other. We say, okay, our sales minus our returns and allowances is our net sales. This is a contra revenue account. So I'll just do this calculation at what I expect to be like the bottom of the page. I'll put a little star here. Sales rev minus sales returns and allowances equals sales rev net, right? Our net sales. So $365,000 minus $25,000 equals $340,000. This is the number we tell our shareholders about. If you look up Walmart or your favorite retail company on the internet, you look up their financial statements, this is the number they tell you. They tell you the net sales. So that's what we're going to tell our shareholders as well. So we'll start there. Sales, revenue, net. And it was $340,000. So that's the first new thing. Because we have a retailer where there's sales and there's returns, we end up with net sales. The next new thing is this account, cost of goods sold, and it's a special account. It's an expense, but it's an expense that gets top billing. So we list our COGS, our cost of goods sold next, and our COGS was $150,000. Sales minus COGS equals gross profit. A new subtotal, 340 minus 150 equals, trying to do the math in my head, 190. then we're going to list, then from here, it's just a normal income statement. We list our operating expenses, gives us our operating income, then interest, then that gives us income before taxes, then income tax, then we're done. So just very much a normal income statement from chapter 1 after this point. So the key points are already done. We have a new format for our income statement because we sell inventory. We have this cost of goods sold expense that gets top billing. And also because we sell inventory, we have sales returns to contend with. So a couple of new elements from here, nothing new. So let's do it. We have operating expenses, and then it's like everything down to interest is considered an operating expense. So wages, bad debt, advertising, etc. I'm just going to list them out. Wages expense, bad debt expense, advertising expense, utilities exp, depreciation exp, rent expense, insurance. These are all operating. Sometimes a student will say, is insurance really a part of the day-to-day business? And the answer is yes, you need insurance to run a business. So it is no question an operating expense. So I don't know, I've pulled up my calculator. I have to put the numbers down. Wages were 55. Bad debt is 5. Advertising 12. Utilities 2. Depreciation 6. Rent 15. And insurance 10. Now I can total my operating expenses. So totaling up here, 55 plus 5 plus 12 plus 2 plus 6 plus 15 plus 10, I get 105. 190 minus 105 is 85,000. This is my operating income or my operating profit. I'm actually I can just see I'm running out of space here. I'm going to move this thing down. That's one of the beauties of being on a computer. It's very easy to move stuff. I don't know, maybe move it down even a little further still. Oh no, what happened to it? Control Z, Control Z, Control Z. Where's the undo button? There we go. What on earth? Sheesh, this touch screen has just been fritzing lately. Anyway, I've moved it down. Whew. Tragedy averted. Okay, thank goodness for the undo button, right? If you're not familiar with undo buttons on a computer, you are missing out. Control Z for my American cousins, Control Z for my Canadians, and maybe the rest of the world. I don't know. Write in the comments below if you're watching on YouTube. Do you say Z, Z-E, or Z-E-D? And what country you're from. I know that UK people say Z, Canadians, because we're Commonwealth, say Z. I know Americans say Z. I wonder what other people say and what they learn, right? If you're from, China or something, did you learn Z or did you learn Z when you were learning the English alphabet? Just curious, just kind of a random thing. Okay, we got our operating income. Sorry for the the sidebar, the things you think about. Operating income. Next is our other stuff. So we have other expenses, and in this case, it's just interest expense, and our interest expense was $7,000. That brings us down to our income before tax. Our income before tax, 85 minus 7 is 78. And now our income tax. And our income tax expense was 21. And that brings us down to our very bottom line here. Our net income, 78 minus 21 is $57,000. That gets the old double underline, $sign at the top of each column, $sign beside the bottom line of the statement, And there we have it. We've got a good income statement. Part I of this question here, just circle it in red, says compute the gross profit percentage. Okay, so we know our gross profit is right here. It's 190. And the gross profit percentage is just the gross profit divided by the sales, and the sales in this case are 340. So I'll do the calculation down below here. Gross profit percentage equals gross profit divided by sales equals 190 divided by 340. And this will be a percentage, of course. 190 divided by 340, 0.5588, 58.88%. 55, I think I said the wrong number, 55.88%. What does that tell us? It tells us, I'm going to double check that number. Okay, yeah, I was worried I had said the wrong thing. 55.88% tells us the markup, right? We mark up more than double the cost, right? Our gross profit is more than half of the sales. In other words, when I sell, for every dollar I sell, 55 cents of it kind of covers my own expenses. 45 cents of it, 44 cents of it covers the cost of goods sold, covers just the buying the product from my supplier. So that's what that means. That's a key number. And for this, if you're sort of looking at a company from the outside looking in, bigger is better, right? You'd rather see higher margins. Apple, the famous phone company, always brags about this, right? Tim Cook goes on the calls and he says, our average selling price is up, our margins are up. These are things they want. And when they talk about margins being up, they're talking about this number, the gross profit percentage. So very useful number to know, one that investors are very interested in, and so too should you be. All right, that's all for this part of the video. In the next video, we'll do the statement of changes in equity. Stay tuned.